Alright, so in this video, I'm going to reveal what my positions are in my stock market portfolio, specifically with Questrade. So as you know, my strategy mostly is writing covered calls and selling option premiums. So let's start with my margin account. So first position I have here is Apple. It's an iron butterfly. This is an options trade. This trade I actually placed to fix a previous trade I made last month that didn't go well. So this trade I placed simply to give myself a chance to recover the losses from the previous month. So last month I had sold an iron Condor on Apple. I collected, I believe, $48, but my total risk was $450. And I needed Apple to stay below 200. Now at expiry date, Apple was trading at around $204. So I had to buy back the option, which cost me $300. So I lost $252 on that trade. But I also, in the same time period, I sold another put option collecting $160. So I'm still down $140. So then I sold an iron butterfly, giving myself another month extension, hoping that Apple comes back down to 200 or in the range of 200. And I collected $450. So now I'm up $310, but I might have to close this trade for $500. So I would still lose about $190. But the goal is to close it at, if I can close it at $310, then I wouldn't lose any money. I'd break even. But right now, this trade, if I want to close it, I could probably close it at around $275, which is something I'm willing to do. We'll see next week. So I also have AMD. So this is a covered call trade. Bought the stock at 27.83 and sold call options at a 26.5 strike price for May 17. Collected $2.68. So that's about a 5% return in 1 month. We've got Activision Blizzard, which is also a covered call trade. Sold call options at a 45 strike, collecting $2.48. Now, of course, the stock is trading at 48, so I missed out on more profit potential, but that's okay. That's my strategy, is to make consistent 3 to 5% every month. So 2.48 divided by 44.7, so that's 5.5% in 1 month. Bristol Myers, sadly, since the stock dropped, I wasn't able to make a decent trade. So the call option I was able to sell was at a 50 strike price, and I had to go all the way out to June 21st, and I was only able to collect 36 cents. So for this month, Bristol Myers trade was very weak because the stock dropped a lot, and the value of the premiums also dropped a lot. I could have chosen a strike price lower than 50, but I know that it could move easily in a few weeks. So I didn't want to take the risk, so I stayed at a 50 strike price, and the only call premiums that made sense was going all the way out to June 21st. So that's 36 divided by 50. So that's not even a percent, and that's across 8 weeks. So annualized, that's 4.6%. So it's like a dividend stock, but that's just hopefully until June 21st. Hopefully after that, Bristol Myers recovers. I also have cars.com, which is a covered call trade. So bought at 22.81. So this is the second month, this is the second month I'm selling a call option against it. So this month I collected $1. So $1 on 22.81. So that's 4.3% this month. Disney here is the devil. I don't even want to talk about it. This is a losing trade that's going to cost me $400. So basically last month I placed an iron Condor trade on Disney between 102 and 122. The stock decided to jump to 131. And now it's trading at 138. So I went past my short strikes, and this trade is just trying to recover, giving myself a chance to recover the losses, but it looks like it's not going to happen. I also have Electronic Arts, which is a covered call trade. Bought at 93.42, sold the call option at 93 strike price, collected 4.84. So that's about 5% as well in 1 month. Got some Kraft Heinz, 45 cents on 36. That's not a big trade. So that's 1%, 1.25%, but that's across 2 months because I placed this trade 2 months ago. We got Macy's. So if you watch my video on Macy's, I already talked about this trade. So this is 92 cents on 25.82. This is a covered call trade. So that's 3.5% in 1 month. I've got Six Flags that should expire on May 17. Bought the stock at 54. Right now it's trading at 51.7, but this call option at 105 that I sold was 2 months ago as well. So $1.05 divided by the 54 price that I bought it at, that's 1.9%, but that's across 2 months. I bought some Teva Pharmaceuticals at 14.98, sold 88 call option at 88 cents. So 88 divided by 15, that's 5.8% in 1 month. I've got a Tesla Iron Condor expiring May 24th. As you can see, my strikes are 305 and 210. So I think I collected about 85 cents on this one, so $85. My risk being the difference of 585. So my risk being $415. I make my max profit of $85 if the stock stays above 210 and below 305 come expiry date. So staying below 305 looks like it has a very good chance since the stock is dropping and it's trading at 235 right now. But now there's a risk that it drops below 210 because it's getting closer and closer. So I might have to make an adjustment if it drops some more next week. We'll see. I need it to stay above 210 before May 24th. I also have another Iron Condor expiring May 17 on Tesla. This time on the call side, it's 330. So I need the stock to stay below 330. So that's going to be very doable. But I also need it to stay above. I need the stock to stay above 215 come May 17. So this one's it's getting close. So there's a good chance that I'll be making adjustments to this Iron Condor trade next week. The adjustment being, I'll probably sell another vertical call, maybe closer to the stock. So maybe at around 280. So instead of having my call strikes at 330, I could probably have them at 280, right? Since it's trading right now at 235 and there's 2 or 3 weeks left. So by selling another vertical call at 280, I'm going to collect an extra credit. So this initial trade generated a $1 credit, so $100, and maybe I can go get another maybe $40. So that's going to reduce my overall risk in case Tesla does end up below 215 come expiry date. I could also just close out the trade. So I can buy back this section of the trade, the put vertical spread, but it might be at a loss. A small loss though. We'll see. And I've got Weight Watchers, of course, that's destroying me. I bought it at 30. Right now it's trading at 17.95. But I made an adjustment to the call option. Initially, I had a 30 strike price. I bought it back and then sold at a 22.5 strike price when the stock dropped even more. So this is not my cost, the 22.5 strike here. I don't want to sell my shares at this price, but I have a pretty good feeling that the stock won't go above 22.5 come May 17. So I sold at this strike price to collect 45 cents, which represents 1.5%. So as you can see, some covered call trades will generate 3, 4, 5%. Some will generate 1%. But on average, I would say that overall they generate 3%. I've got a bunch of United States Steel, as you can see here, at different strike prices. I've got Zillow Group that I bought at 34.6, sold at 2.65 call option at a 34 strike price. So that's about $2 on 34.60. So that's 5.7% in 1 month as well. In my TFSA, I've got American Airlines that I bought at 32.56, sold a call option at a 32.5 strike price, collected $1.09. So that's about 3% in 1 month. I've got APHA.TO, Afria Inc. I bought it at 11.73. I bought it when the stock went from like 18 to 11.75. So I bought the stock at that day, but it dropped even more now. It's at 10.15. Regardless, I bought it at 11.73. I sold a call option at a $12 strike price, collected 90 cents. So I collected 90 cents on 11.73, which is 7.6% in 1 month. I got Bed Bath & Beyond that I bought at 16.52, sold a call option at 16.5, collecting 77 cents. So that's 4.6% in 1 month. I've got CHK that I still own, bought a while back at 2.79. This is probably my 3rd month selling a call option against it. I sold it at 22 cents. At a 3 strike price. This is a pretty good one actually. So 22 cents divided by 2.79. So that's 7.8%. And also if the stock is trading above $3 come expiry date, I collect an extra 20 cents, which is the difference between $3 and 2.79 or 2.80. I still have IMGen, which was just a risky trade, a greedy trade, and now I'm paying for it. The stock is down 55%. So the underlying stock on this covered call trade, it is down 55%. I've collected some decent premiums the first month, but now I'm forced to collect pennies every month, and also at a very dangerous strike price because my cost on this was about $5. So now there's a risk that my shares get sold at 3. My break even is about $4. My break even on this trade is about $4, but I don't want to sell at break even or else I wouldn't be making profit. The point of trading is to make a profit. So if I can sell at $5, then I'm profitable. But definitely if my shares get called away at $3, I'm at a loss. But I had to take this strike price in order to collect something out of the stock, which was 5 cents. 5 cents per share, of course, so about $20. So this is a an old trade that I had when I was with Investors Edge, Kraft Heinz, that I bought at 75. So when it got transferred over, the day it got transferred over, it was trading at 46.75. That's why the cost shows at 46, but it's actually 75. And right now the stock is trading at 33. So I'm down probably easily 60% on the stock. Now I only have 36 shares. So if I want to place a covered call on it, I have to buy 64 shares of Kraft Heinz at the current market price to place a covered call trade. But I feel like I've got enough of Kraft Heinz. I'm not sure if I want to buy more Kraft Heinz. So I think I'm going to get rid of this position, but I'm just waiting for waiting for a better time. I've got some more Macy's here that I bought at 24.17, sold a call option at a 24.5 strike price, collecting $1.18. So $1.18 divided by 24.7, that's 4.7% in 1 month. Got my Neo that I bought at 5, trading right now at 4.92, collected 49 cents at a 5 strike price. So 49 cents on $5. That's going to be a pretty good one, almost 10%. So 49 divided by 5.01. That's 9.7% in 1 month. Got some more Sprint, bought at 5.75, sold at a 5.5 strike, collecting 68 cents. So from the 68 cents, I need to remove the difference between my cost and my strike price, so 25 cents, and that divided by my strike, which is 5.5. So it's 43 cents divided by 5.5. That's 7.8% in 1 month as well. I've got Square that I bought at 75. Right now it's trading at 71. So I'm down about 5% on the stock. But I sold call options at a 73 strike price for $5.14. So I'm okay with the stock trading at around 73 because I want to sell it at 73. So I bought it at 75, collected 5.14. So my true cost is 69.86, but I want to sell it at 73. So that's my profit here, $3.14. Which represents a return of 4.4% in 1 month. But if Square stays at this price come expiry date, I'm going to keep my shares and I can collect another I can sell another call option at a 73 strike price. But earnings is coming out for Square, so there's going to be movement for sure, either up or down. We'll see what happens. Got this Teva trade, which is an old one. I bought a bit too high at 18.5. Right now it's at 15.36, and I had to sell. This is an option I sold 2 months ago, expiring May 17, collecting 28 cents. So in my RSP account, I've got Aurora Cannabis that I bought at 10.02. Right now it's trading at 9, but I collected some decent premiums the first month. So they expired, my options expired last Friday. So on Monday, I'm going to sell another call option on Aurora Cannabis. Most likely I'm going to choose a $10 strike price because that's my cost, even though the stock is trading at 9. So I won't get a high premium, but I'll get something out of it. Actually, we can go see right now what I'd be getting on ACB. So if I go, let's say for May 17 at a $10 strike price, I can probably collect 25 cents, which is 2.5% in 1 month. So that's the thing. So I bought a stock at 10, it dropped 10%. First month I collected 8% in call options. Second month, even when the stock dropped, I'm still able to collect 2.5%. 2.5% in 1 month is 30% per year. Where can you make 30% a year on a stock that dropped 10% in value? So really, that's the beauty of covered calls. So here are my only dividend stocks. I got rid of New York Mortgage Trust, which was paying me 13% dividends per year, and I kept DFN.to and FTN.to because their yields are above 15% per year and they pay dividends monthly. And also, I like their model, their strategy. They buy blue chip stocks that pay dividends, and they write far out of the money covered calls on these stocks in order to make these high distributions that they're making. So as you can see, most of my covered call trades are at the money call option. So if I buy a stock at 16.5, I sell a call option at 16.5. So I don't care if my stock gets called away or sold. But with these mutual funds here, they will sell call options far out of the money. So they'll collect a smaller premium for sure, but they keep their shares, their blue chip stocks, which pay dividends. So it's a way of increasing your dividend yield or doubling your dividend yield. So for example, if we looked at ACB, I'm going to sell a call option at 10. But if I want it, I could sell a a call option at 11 or even more, I'd collect a smaller premium, but I would increase my chances of keeping my shares. And if the stock does go up past my strike price, I also make an additional profit of the difference between the strike price and the price of my stock, between the strike price and the cost of my stock. So that's another strategy with covered calls, is always selling far out of the money, as far as you can go, just to make sure that you keep your shares. And it's a way of collecting an extra dividend, or a way of increasing your dividend yield on your stocks. So I've got Honda Motor that I'm gonna sell pretty soon, just waiting for it to get close to 29. It's not doing anything for me, getting 3% dividends per year, but that's it. And since I bought it, it's been down, so I'm just gonna get rid of it as soon as I can. I've got L brands here that I bought at 26.2, trading right now at 26.17, but I sold a call option at a 26.5 strike, collecting $1.50. So that represents 5.7% in 1 month. So these are my positions in my stock market portfolio with Questrade. As you can see, most of my strategies are covered call trades, collecting premiums, selling premiums, also doing a little bit of Iron Condor trades, but it's mostly going to be covered calls. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. So if you want to get my trades live as I place them during the day, I'm starting this WhatsApp group. So if you're interested, for $10 a month, you can sign up, and I'll be sending my trades every day as soon as I place them. Also, it is tax season, so if you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below. Thanks for watching.